The Trading Pit Honest Review. Hey everyone, in this video I will break down the Trading Pit's ecosystem, how the evaluations and scaling work, which platforms they integrate with, payouts, education, and whether it's a place I'd recommend in 2025. The Trading Pit positions itself differently from many funded firms. It is more of an ecosystem. So at the homepage, they do provide links for programs and education and partnerships. That high level view is very important. The trading pit isn't only about getting you funded, it's about offering paths for ongoing development and potential career progression. With Trading Pit, the core concept is a tiered scaling program. You start with a smaller account, and as you show consistent performance, you move up the ladder to larger capital and improved payout splits. That stepwise growth is slower than a one-off funded account, but it reduces the shock of jumping to larger sizes too early. The evaluation process tests discipline, profit targets, max drawdowns, minimum trading days, and sometimes risk to reward expectations. The trading pit emphasizes consistent trade sizing, and that's visible in the rules checklist. I like that they measure risk behavior, not just raw P&L, because it encourages stable, repeatable strategies. The platform flexibility is a major plus. The Trading Pit supports MetaTrader, Bookmap, ATAS, and other industry tools. Here you can see some tools. If you like order flow analysis, Bookmap is available. If you prefer classic charting, MT5 works fine. The rules vary by tier, but a recurring theme is strict loss management. The Trading Pit's rules include a daily drawdown and overall drawdown, plus position size limits in some tiers. It is small but important. Some traders chafe at strict rules, but I found all these guardrails actually helped limit mistakes and kept my P&L curve from large emotional drawdowns. Something unique here is the career path. Consistent top performers may be offered partner roles or even mentorship opportunities inside the ecosystem. It is not just marketing, there are documented examples of traders who progressed to larger allocations and then moved on to take up community roles. That aspect makes the trading pit feel like a long term home rather than a one off funding event. Payouts start conservatively, and initial split might be lower, but as you scale, the share to the trader goes up. I tested a withdrawal and it was processed in a reasonable window. The model incentivizes grinding through the tiers to get better splits and more capital. It's slow growth, but the upside becomes meaningful. Education is a core part of their offering. The Trading Pit provides structured lessons, live workshops, and mentor sessions. For newer traders, this support can be the difference between failing an evaluation and passing. For experienced traders, the workshops and shared trade reviews are useful for refining strategy. The community is active. There are chat rooms, review rooms, and recorded trader roundtables. That community element can lead to collaborations and real opportunities beyond a single funded account, which is rare among prop firms. Cost varies by tier and product. Higher tiers cost more to enter but offer bigger capital. Yes, the fees add up if you repeatedly fail evaluations, and that is a valid criticism. But when you compare the fee to the potential capital access, plus the educational and community benefits, the value proposition strengthens for traders who plan to develop and scale. The trading pit is best for traders who want more than a single funded account. If you want a career path, mentorship, and a community to grow with, this is a serious option. If you're looking for a quick, one time funded experience with minimal support, another firm might be a simpler choice. The trading pit feels like an ecosystem rather than just a funding source. It's structured, supportive, and designed to reward consistency and long term development. The trade off is that growth is gradual and you'll need patience. If you're committed to improving and want to be part of a community with real scaling opportunities, it's worth checking out. If you'd like a separate deep dive into their education modules or a walkthrough of a funded path, say so in the comments and I will make it. To make this review more complete, I also want to highlight some practical insights that can help traders get the most out of the trading pit. These come from patterns I have seen with new prop traders, and they can make the difference between passing and struggling. So, if you take care of these small mistakes that many traders are committing, you will definitely have a much better experience with the trading pit and you will have a successful outcome. A common challenge is trying to finish the evaluation too quickly. Many traders open large positions, hoping to hit the profit target in just a few sessions. So, on paper, it does sound efficient, but in practice, it usually leads to a daily drawdown violation. So, if you slow down, manage risk, and spread trades over multiple days, you actually increase your odds of passing. So this is just one of the things that you need to look out for. If you look out for this, if you try to stay aligned with the rules, then definitely you will have a very good experience with the trading pit. But the market conditions also play a big role. Some traders treat every day the same, but volatility around major news releases can turn a safe strategy into a risky one. A single spike can wipe out progress. Waiting until the market calms down or trading smaller around events shows a discipline, and that is exactly what the trading pit is testing for. Beyond the evaluation, it is worth thinking about scaling. Passing the challenge isn't the end goal, that is the start. The trading pit allows traders to scale as they prove themselves, which is where long term growth happens. Planning ahead for how you'll manage risk on a larger account can make the transition smoother when you do get funded. So don't just think about just the basic first goal, but think about what would be helpful in the long run and continue your progress in that manner. Set your mind to the larger goals. It would really help you focus on the smaller things and build from there. Something else to keep in mind is mindset. So many traders come in with the idea that prop firms are just a quick way to access capital, but the ones who really succeed treat it as a professional step. You definitely need patience, consistency, and emotional control. This matters as much as strategy. The trading pit's rules aren't there to make life hard. They're actually there to filter for exactly those qualities. So if you do not show patience or consistency or emotional control, you will be filtered out through those rules way ahead of time and you cannot mask anything. You actually need to have a lot of patience and consistency. And if not, that will definitely be filtered out. So make sure you show these qualities or you make use of this strategy. And at the end of the day, the trading pit can be a valuable platform, but only if you approach it in the right way. So, as you know, no one can help you if you do not want to help yourself. So, you definitely want to be helping yourself, and you need to have that mindset where you can benefit from this platform. So, by trading at a steady pace, and keeping records, respecting volatility, planning for growth, and maintaining the right mindset, you will give yourself the best chance to not just pass the evaluation, but build something sustainable once you are funded. So keep in mind at all times before the evaluation and when you are preparing for the evaluation, that is not the only goal. You need to learn and you need to prepare yourself for actual trade. The ultimate goal is actually being a good trader and making something for yourself and not just passing the evaluation, although it is something which will shape you for the future and help you out in the long run.